Hello, in this video, we're focusing on the practical concepts that you can actually apply in the real business world. Hope you enjoy it. Let's get on with it. Starting and growing a business takes more than just passion and creativity. It requires a solid understanding of how money works and how to manage it strategically. Many entrepreneurs have great ideas and operational skills, but struggle because they don't have a strong financial foundation. The truth is, business success depends mostly on financial discipline. You don't need to become an accountant, but knowing key financial principles helps you make better decisions, grounded in facts instead of guesswork. For example, every choice you make, from setting prices to hiring staff, involves money, so understanding the financial side is crucial. Plus, managing cash flow well is essential, since cash flow problems are a leading cause of business failure. When you grasp concepts like working capital and debt cycles, you can keep your business steady and prepared for challenges. This overview will guide you through these important financial ideas, show how they apply in real business situations, and explain why mastering them is vital for long-term success. Being financially literate gives founders a clear advantage because it builds stronger confidence with investors and lenders. When you can communicate well, back up your plans with solid forecasts, and negotiate confidently, it makes a big difference. Small financial changes like controlling costs, improving profit margins, or adjusting pricing can turn a business from struggling to profitable. Beyond immediate gains, understanding finances provides long-term clarity, helping you make smart decisions about expanding, diversifying, or even selling your business. One of the most important areas is cash flow management. This is the money coming in and going out daily that keeps your business running. Key ideas here include operating cash flow, which is money from your main activities, the cash flow cycle, or the time between paying your bills and getting paid by customers, and working capital, the liquidity you need for day-to-day operations. To effectively manage cash flow, it's important to forecast cash regularly, negotiate better payment terms with suppliers, and encourage customers to pay faster with discounts or incentives. Another crucial principle is understanding the difference between revenue and profitability, because earning revenue alone doesn't guarantee a healthy business. Profits are what show the real financial health, and knowing how to measure and improve profitability is essential for success. When looking at your profits, it's important to understand the difference between gross profit, operating profit, and net profit. Gross profit comes after subtracting the cost of goods sold. Operating profit accounts for all expenses, and net profit is what remains after all costs, including taxes. You should know the gross margin for each product or service you offer, track your expenses by category each month, and compare your profitability with industry standards to see where you stand. Pricing is not just about covering costs, it's also a psychological decision that can affect how customers perceive value. There are different pricing methods: cost-based, competitor-based, and value-based, with value-based pricing being the most effective because it sets prices according to the benefit your product or service provides, rather than just what it costs you. Budgeting and forecasting are essential tools. Budgeting helps you allocate resources wisely, while forecasting lets you anticipate future outcomes. It's best to create a rolling 12-month forecast, compare actual performance against your budget regularly, and adjust your assumptions based on those results to stay on track with your goals. Finally, borrowing money isn't good or bad by itself. It's a tool. Understanding how debt and leverage impact your financial risk helps you make smarter decisions about when and how much to borrow. Cost of borrowing and understanding your debt to equity ratio, along with your interest coverage ratio, are key factors to manage when using leverage wisely. Leverage can help you grow, but without careful management, it can cause serious trouble. Break-even analysis is crucial because it tells you exactly how much you need to sell to cover your costs, which helps with pricing your products, launching new ones, and assessing profitability. Financial ratios and key performance indicators give you a quick snapshot of your business's health. These include gross and net margins, current ratio, trade debtor and creditor days, gearing levels, customer acquisition cost, lifetime value, and return on investment. Tracking these metrics regularly helps entrepreneurs run more predictable and profitable businesses. For example, a cafe that was profitable but constantly short on cash improved its situation by analyzing cash flow cycles, reducing excess inventory, and renegotiating supplier terms, which significantly boosted cash flow and allowed for expansion within a few months. Luxury clothing brand improved its profitability by switching to value-based pricing, which increased product prices significantly without losing demand. A SaaS startup tracked key metrics like lifetime value and customer acquisition costs, realized it was overspending on marketing, and adjusted its strategy to boost lifetime value and cut costs, transforming its business. Meanwhile, a small manufacturing firm used break-even analysis to decide when to invest in new equipment, allowing safe scaling without incurring unnecessary debt. Financial Mastery offers several advantages. It gives entrepreneurs better control and confidence over their business, helps increase profitability by identifying where money is made or lost, reduces risk through early detection of financial issues, and builds stronger trust with investors who value leaders knowledgeable about their financials. Growing your business with financial knowledge is key to making strategic decisions rather than risky guesses. However, this skill does come with some challenges. It takes time and effort to fully understand financial principles, which can feel overwhelming if you don't have a finance background. Learning the terminology and tools involved is not always easy. On top of that, mistakes in interpreting financial data can lead to costly errors, so careful analysis is important. There is also a risk of focusing too much on the numbers and becoming overly cautious, which might cause you to miss out on valuable opportunities. Recognizing these challenges helps you approach financial learning realistically while still leveraging it to scale your business smarter. Financial mastery is one of the most important skills an entrepreneur can develop because it turns uncertainty into clarity and chaos into control, helping create sustainable growth. It's not about becoming a finance expert, but about becoming a smarter, more capable leader who can guide a business through both challenges and opportunities. By understanding key concepts like cash flow, profitability, pricing, forecasting, leverage, break-even analysis, and important performance metrics, entrepreneurs are able to build successful companies on purpose, not by chance. Your ability to manage money effectively is crucial for growing and scaling your vision. In today's fast-changing and competitive markets, financial mastery isn't optional. It's essential for long-term success. If you found this video useful, there's plenty of more business and finance videos on the channel that you'll enjoy watching and get great practical value from. In the meantime, thanks for watching.